Hi there, I'm Farrell Macdonald, real estate broker here in Toronto, and I'm here today to share with you my thoughts on the Toronto market based on the information released for the month of June. We're talking about what happened to prices, what trends we're seeing, even a little case of deja vu. Have we been here before? I think we have, and I look forward to explaining why. And I'll offer up a few tips to anybody navigating the uncertainty out there, anybody currently active in the market buying or selling houses or condos here in Toronto. And for those of you I haven't had the opportunity to meet or speak with, my background is in accounting, so I love charts and numbers. I've served on some advisory boards both in our brokerage and in the industry at large. I'm a trainer, helping new realtors and experienced realtors. And I'm really passionate about the educational side and raising the bar of our profession overall. Little disclaimer, any thoughts contained here are my own. I work hard to gather data provided by the Toronto Regional Real Estate Board, but anyone relying on this information should do so within the context of their advisors and making sure that any decisions they make are appropriate for them. So a little recap of the May market. In May, we saw a marginal increase over the year before of only 3%. Sales were down 54%, so we're still in a bit of a slump last month. The days on market was up slightly, 26%. So things were moving, but they were just taking a little longer. Now, compared to the month prior, the month of April, which was our first full month of lockdown with emergency measures in place, we saw an average price increase of 5%. Sales were up dramatically over the month before. And days on market in May versus April were up 26%. So again, things taking a little longer, but much more activity, and we even saw a price increase. So in June, we saw an increase in the average price of 12% year over year. Sales were down only 1% versus June of 2019. And the days on market was actually down. So things had started to move a little more swiftly. June 2020 versus May 2020, we saw an increase in the average price of 8%. Now the sales volume took a rather dramatic leap, up 89%. So we recovered a lot of the drop in activity that we'd seen in April and May. And days on market again is down, just happens to be 13%. So things are moving a little more quickly. So this is the year at a glance so far for 2020. We can see here, started off from December, just below $840,000. Big spike in February, drop off in March, which was a sort of a blended month. We had half of the month pre-lockdown, half of the month post-lockdown, so it's a bit of a blended month. Big drop in April, which everyone heard about during my update for April. Slight recovery in May, and then we see a dramatic increase in the price for the month of June, which has surpassed the peak we saw in February, which is already getting a little frothy in some people's opinions, mine included. So we're now above that peak. And I want to talk a little bit about where the activity is coming from. What I did is I went back a few years, and this is very typical in Toronto, what we've been seeing certainly as a trend. On average, about 2/3 of the activity, so 2/3 of all the sales in any one given year, and these are year-to-date numbers, is broken out about 2/3 houses, 1/3 condos. That's been fairly consistent. This chart shows us that. Heading into 2020, we saw a slight uptick, about 68% versus 32% for condos. One of the reasons is the City of Toronto had introduced measures to curb or put restrictions on short-term rentals, like Airbnb, for example. That was introduced in 2017, but was delayed because of an appeal by a lot of the short-term landlords and owners. So that appeal was decided in December of 2019. So the city has agreed to proceed with their plan to curb the activity and put some restrictions on what qualifies as a short-term rental. So that introduced a lot of condos back into the market, either as longer-term rentals or they were being put up for resale. So definitely a lot more availability. And I think because of the pandemic, we have seen people moving from condos into houses, standalone houses. So there has been some of that activity. That explains some of this, but I think we're definitely seeing a trend toward a greater proportion of house sales versus the number of condos. And these are resale condos, by the way, not pre-construction. That's a whole other conversation. So I want to talk about the prices, the price activity in 2020 versus what we saw in 2017. Reason being, the orange line is 2017. Started off just as any other year, really. We had seen some increased activity in later 2016, leading up to 2017. But you can see a very dramatic spike here in the month of February, continued into March, right into April. The government introduced their Fair Housing Act, which was introduced in May, and that included things like the stress test, which was a big factor in the shift that we saw following that. Buyers had to qualify at the higher of the 5-year fixed rate or 2% above the rate that the lender was offering them. So that was a game changer. In addition, they introduced a foreign buyers tax to curb some of the offshore speculation. So we ended up seeing a 20% drop from this peak, and it took about 2 years to sort of come back to what we would call normal levels. But this was 2017. This was a lot of hyper speculation and froth. You can see the blue line, which started off here January, pretty typical, big spike in February, drop off in March because we had COVID-19 taking over. And of course, the emergency measures, lockdown, shelter in place, etc. So big drop off there. April, we saw a big drop off in prices, 9% drop. Some recovery in May. And now in June, we are now above certainly the peak we saw in February here, 2020, but we're also above the peak we saw at the height of the market and all that craziness in 2017. So I want to talk a little bit about that. It's certainly catching a lot of people's attention. I'm not trying to ward people off or scare people off the market in general. However, back in 2017, I think there was a lot of speculation and people believed that things could only go up. So I want to talk about that and using only 3 examples of sales that took place in 2017, but didn't have very happy endings, unfortunately. April 2017, and this is central Toronto. This particular example is in central Toronto, very prime neighborhood. This is not a hard place to sell a house. The property sold for $1.5 million. It was 34% over asking, but it failed to close. Now, I don't have all the background on that. It could be because the property didn't appraise, the lender didn't support what the purchaser was paying, had agreed to pay for the property. The buyer could have gotten cold feet and tried to back out. We don't know. There was a lot of shifting going on in 2017. The property was relisted 2 months later. It did sell again, but at $1.2 million. So best case, this is a loss of $300,000 or $300,000 less than the original sale, only 2 months later. And this is after the fair housing measures were put into place. Example number 2, this is the prime east side neighborhood, not right downtown or uptown Forest Hill high-end market, but a prime east end neighborhood. May 2017, the property sold for $2.6 million, which was 30% over asking price. In October 2019, so just last fall, the property resold by the new owners, also sold for $2.6 million. Now this is over 2 years later, 2.5 years later. So best case, when you factor in the closing costs on the purchase, including land transfer tax, deduct some commissions when the property was sold, and we're looking at a loss of at least $132,000, 2.5 years later. In March 2017, this is an East End neighborhood. The bungalow, this was a bungalow, it was purchased for $875,000, slightly over asking. I think it was 6 or 7% over asking. And in June 2020, the property was resold. That's just this year for only $865,000. Best case, when you factor in the closing costs on the purchase, deduct some commissions on the sale in 2020, at least $71,000 loss, and this is 3 years later. So again, this is not meant to scare people off being in the market at all, but I do think anyone purchasing or selling at the moment needs to be cognizant of the risks. There are always risks, and just try not to get caught up in this hyper speculation or froth or what we call the fear of missing out. So what might happen next? Who knows? I certainly don't have a crystal clear ball, but if the economy recovers, as everybody is hoping, then employment should return to more normal levels and it should be more or less business as usual. That's the best case scenario, certainly what we're all hoping for. If economic recovery falls short, we may see substantial layoffs in the latter part of this year or the beginning of next year. Now, the government of Canada has extended the wage subsidy from September to December, so that tells me they're probably not seeing the economic recovery they were hoping for, but that should hopefully tide us over through to another quarter and avoid some of these layoffs, we're hoping. If we do not see a second wave of COVID, which some experts and scientists are predicting or expecting, or warning us about at least, then we may not require additional government measures. So again, if that second wave doesn't come and we don't require another lockdown or business shutdown, then we may not require any additional government measures. If the fall does bring a second wave, unfortunately, that could lead governments to examine other strategies, as the current measures may not be sustainable to tide us over through that. And these measures are expensive, as everybody knows. We're watching national debts rise quite dramatically. So I think it's something to bear in mind. So there's still a lot of uncertainty, I think. Now here in Toronto, if I had to summarize, I would say it seems to be a good time to sell a house. If somebody is selling a house, chances are that will go quite well, quite quickly, and probably fetch a pretty good price. It also seems to be a good time to buy a condo. Now, I don't want to give the impression condos are not selling or there's a glut of them, but there does seem to be an uptick in the number available for sale. So anyone shopping for a condo, you have more to choose from, and there doesn't seem to be nearly as much competition in terms of bidding wars and price escalation that we're seeing on the freehold side. So good news for condo buyers. And as always, I do want to stress, if anybody is out there in the market buying or selling house or condo, but especially in these uncertain times, I would really encourage you to gather different perspectives to help make the very best decision that suits your own personal, unique circumstances. It's never one size fits all. It's never a good time for everyone or a bad time for everyone. It's got to relate to your plan, how long you intend to hold the property. Some of those examples I showed you from 2017, one of them sold recently. That's over 3 years later and was still sold at a loss. So I think no one can say for sure how long they're going to hold the property, but I think it requires a conversation to really examine the risks if the plan doesn't roll out exactly as you expected. And those are my thoughts for June. Thank you for joining me today. Questions and introductions are always welcome. You can send them along to Farrell@farrellmacdonald.com, or phone and text also works just fine. Meanwhile, I hope you'll tune in next month when I'll deliver the latest and greatest for July. See you then.